This is Kirk speaking. I'm going to give you a quick overview of how to use the dApp and the key features of the protocol. So when you arrive, you land on this dashboard which shows you some information. You can look at your personal view here, or you can see the global view. That's what you land on. So you can see that there's a certain amount of collateral, how much debt, borrowable liquidity, mostly self-explanatory. A couple things to mention. Guild staked. Guild is the governance token, and it also is, besides the standard kind of voting stuff that you see for any token governance, you can stake Guild on specific lending terms. A lending term means the collateral asset, the borrow ratio, the interest rate, and all the other parameters that make up a loan. So there's not just one lending term per collateral asset, there could be many. In fact, here you can see that there's 161 different terms currently deployed in the USDC market alone, and that's one of what I think is pretty cool about our protocol, is that it can scale up to a much wider diversity of loan types than any existing lending pooled model. You can see right now we've got a few types of collateral that are in active use. There is Pendle, ARB, and WETH. There's more that's available. But we won't spend too much time here on the charts and data. There's some interesting things to see, but let's get into the meat of it, which is how you use the protocol. So if you click here, lend or redeem, that's where you start as a saver. You can, I don't have any more USDC in, but you can deposit. It says mint. You can say lend or deposit either way. This is the same as entering a compound or AVA kind of market. You get a deposit receipt token. That's GUSDC. GUSDC1 is seen here because it's possible we could have more than one pool for the same debt asset, with different rules or some special, let's say a pool that was focused solely on real world assets, or maybe a degen pool one day. For now, there's just one pool per borrowable asset. So you can mint, or you can redeem or withdraw right here. Pretty simple. There's some explanatory text. You can see that 90% of all the interest paid by borrowers goes to GUSD savers. 5% goes to the stakers on the lending terms who provide first loss capital and a governance role, and then 5% to the global surplus buffer, which is used as an insurance fund in case of loss. So mint, redeem, pretty straightforward. Let's take a look at how borrowing works. Now we can go to lending terms. This is a list of all of the available different loan terms in the protocol. You can see that the terms with zero debt ceilings are hidden. So these are the terms that have been approved and which have guild stakers voting for them, which allocate some debt ceiling. So a term can be approved, but it will start with a zero debt ceiling unless someone stakes to it. So let's say we wanted to borrow. You can see that ARB is in pretty high demand for borrowing. It is fully utilized. There's some others that have some available capacity. Not very much by the look of it. Pendle is a good example here. Just as a reminder, again, the debt ceiling is based on how many people are staking for that term. So if there's high demand or higher interest rates, guild holders are more likely to stake. Here's the Pendle term. You can see the total amount of deposits, the utilization, all the usual stuff. Just a couple things to highlight here. One is the borrow ratio. You might be more familiar with the term LTV, loan to value, in which the amount you could borrow against a given collateral is expressed in dollar terms, right? So they might say, you can borrow 50 cents of USDC against $1 of ETH. The Credit Guild is an Oracle-free lending pool, so all ratios are expressed in unit rather than price terms. So this says that you can borrow 1 USDC per Pendle token. So if you want to borrow, you can put in how many Pendle tokens you want to borrow with here. It will populate how many GUSDC you're allowed to borrow. You can toggle the loan size that you want here. You can see that runway before call at the bottom. What that means is that once enough interest accrues that you are above the loan's target collateral ratio, your loan can be called and liquidated at that time. So you can decide how much runway you want, how much active management you might have. We anticipate most people will probably want to borrow around close to as much as they can. They're not super long-term borrows, but that will depend on the asset in question. And then also on the lending term page, you can see the interface for staking guild. So if you have guild tokens, You can stake them to increase the debt ceiling. Let's say we were to stake 10,000 guild here. You can see it would increase the debt ceiling by 214 USDC. And then besides staking guild, you could also stake the GUSDC deposit receipts. So either way, you can stake the guild token or a market's native deposit receipt in order to increase the debt ceiling. And just a quick word about debt ceilings. So in the credit guild, all of the debt ceilings are relative. So when we look at these lending terms, you can see the current debt in the markets. So because the ARB lending term has, let's say the ARB lending term has 10% of all of the guild that's staked in this market is staked on Arbitrum tokens, that would mean that 10% of the total debt in the market is allowed to be against Arbitrum. So as the total borrows grow overall, you can borrow more against other tokens too. So it might seem like the available borrowing capacity is low on some of these. That's because the overall total borrowing in the market is low. So as the market grows, all terms will see their debt ceilings increase in a proportion to the amount of guild that is staked there. Down at the bottom, you can see the deprecated lending terms that have been previously offboarded. And I guess the last thing to show you would be if we can remove this, hide the terms with zero debt ceiling, you can see all the 161 terms. These are all the different options that no one has voted for yet, but they are approved by governance already. So if you wanted to go in, let's say right now Arbitrum 14% is fully utilized, so I think, oh, maybe some people would pay 16% to borrow against ARB. I could go in there, stake some guild, and I actually don't have my wallet plugged in, so I'm not going to finish the transaction, but I might want to go stake there, and that would approve it. And instantly, the debt ceiling will increase. There's no delay for that action, so that's pretty cool. You can unstake your guild at any time unless that liquidity is utilized. So once borrowers are borrowing, the first loss capital providers cannot exit until those loans have been repaid. So there's the lending terms. There's the mint and redeem. You can see the governance page. You can delegate your... You'll notice that you can see both delegation for guild and GUSDC. That's because in the credit guild, lending depositors have the ability to veto unwanted governance changes or lending term onboarding. Just note that after you delegate, there is a short lockup, 168 hours. That is to prevent griefing from people who temporarily enter the market and try to block changes. If you want to vote, you have to stick around for a little while. You can delegate to yourself, or others will have a page for recognized delegates soon. We do not currently, but you can participate down here. You can onboard new lending terms. Note that the Credit Guild uses an optimistic governance model. So, you don't need very many votes to propose a lending term, but people can veto it pretty easily as well. So you can create a term, deploy the contract, propose it. See, this is a term that was previously offboarded, so I could propose to onboard it again. It was offboarded because the ETH price went down. Once you've created a term, they'll show up here. And then once the onboarding is proposed, you can go vote for it. I don't think there's any active polls right now. Or you can veto it. So you can veto with either GUSDC or Guild. So worth paying attention to. And there is a general DAO governance. That is not visible here. You can use any kind of governance interface like that for Tally. It's probably out the scope of this video. And finally, I'll just show you the auctions page. There are no ongoing auctions, so not too much to see. But while there are liquidation auctions in progress, you can view them here. And yeah, that's about it. You can toggle between the different markets. So here's USDC, here's ETH. You can see the different collateral breakdown. People are borrowing against their Pendle principal tokens. Other than that, same deal. And just a final word is that a lot of people have asked, well, how does Oracle free lending work? How can you price collateral without oracles or perform liquidations? And the answer lies in that optimistic governance that you've seen. And so proposing a new lending term is like setting a price at which to lend. And so there's a delay for setting a new price, and it's possible to go ahead and veto that new price. And this is how we can resist Oracle manipulation, Oracle attacks, is that some guild holders might propose a new price, but others could reject it. Same deal for offboarding active terms. You can see that over here. You can see this is just a dud poll. We're not actually planning to offboard this, but you can click any term that you want and propose to offboard it. And with the same quorum that you would need to veto, you can go ahead and offboard an existing loan term. Once it is offboarded, the active loans under that term, so let's say we, sorry, my bad. Let's say we offboarded this term, these 2 active loans would be sent to auction. There's a period at the beginning of the auction at which it's not profitable for anyone to bid because the starting price is set very, very high for the collateral. During this time, the borrower has the opportunity to repay their own loan, refinance, do whatever they need to do. But even if they don't act, if they're totally passive and checked out, this will still be a much lower liquidation cost than an existing lending pool. A normal Oracle-based lending pool will charge a 5 or a 10% fixed liquidation penalty. You can click Learn About Auctions and get some more detail here. We got a nice picture I'll show you. Because of this Dutch auction model, it's expected that borrowers' cost at liquidation will only be equal to the swap fee on selling that amount of collateral, the gas cost, and then whatever tiny premium the liquidator can get in a competitive bidding process. So this is very similar to using a keeper to rebalance your positions anyway, but we will be releasing some DeFi Saver-like tooling to make it easier to automate the management of your positions. But this is we've just gone live on Friday, and this is the start of the protocol, so I'll have to update this video once we've sharpened up the UX and have the rest of the tooling out. But in the meantime, thanks for watching, and I hope you enjoy using the Credit Guild. You can visit us on Discord to ask any questions. There's a channel to request new loan terms, or of course, if you've got some guild, you can go ahead and propose those yourself. So have fun.